There we go. Sorry about that, guys. I had to restart. If I leave my computer on too long, my sound card goes all ballistic. So, I mean, it looks like it sounds a lot better. There we go. Perfect. Let's go. I'm gonna let people jump back in real quick here. Maybe I should go delete that last video. How's everybody doing today? You know, like I said, today I don't have a ton of things to show you, but the stuff we do need to go over is actually very important. That this is how we can win. We're going to break down GameStop. It's going to show you, the difference between Adam Aaron, Brian, all these CEOs. We're going to break them all down. We're going to break down these plays. Like I said, there's ways to win this. I can't specifically say the exact words because I can't, incentivize them. But like I said, guys, there's things to do. But I just want to show you because, like, everybody sits here, and the number one problem we all have is, oh, I'm AMC. Oh, you're GameStop. Oh, you're this. Oh, you're that. Oh, my guy's better. Oh, my CEO cares about my squeeze play. My CEO is better because he does this, so he cares about my squeeze play more. And my CEO would never dilute. My CEO wouldn't do this, wouldn't do that. We're going to break down GameStop here real quick as a company. Baby's doing real good. Thank you, by the way. How's everyone doing today? Tony, how you doing, my friend? So let's break into GameStop's finance here. Let's break into their earnings call real quick because tons of people are insanely happy with the numbers. They see the profitability, but they're not really looking down below because GameStop itself, the company, actually operated at a loss. If you look at the revenue difference between this time and from, this point of, August 3rd this year compared to July 29 last year. That's a pretty big downward jump in revenue. You're talking about $360 million plus. That's a big red flag. Now, one of the things that, Ryan's been doing, and one of the things with GameStop is, they haven't been having giant earnings call, telling people the direction of the company, their thoughts, this and that. And now, listen to this, because if you're a hardcore GameStop guy, you're going to think I'm talking shit. No, I'm not. I honest to God believe Ryan right now does not know where he wants to take GameStop, the company. Now, people are going, no, you don't. I know he is doing great. When it comes to capital raises, he knows exactly what he's doing with these investments, what he's doing with all this money. It's offsetting, as you guys can see, we'll go over the numbers here quick, but it's offsetting the losses of the company. So, here's the thing. In 3 years, like I said, we'll go over to Adam Aaron. They've all made mistakes. Every single fucking one of them. Adam Aaron's done stupid things. We as retail investors, and the second time Adam Aaron wanted to raise, all that capital he could have when AMC was in the $20 and we could have raised, and no one wanted to kill the squeeze, we could have raised a ton and it would have been a whole different situation. You would have never had an ape. We've all done stupid things. They've both made mistakes. They're both not making mistakes, but doing things that are going to hurt each squeeze, each play, their retail investors. As you can see, Ryan, everybody, anytime Adam Aaron diluted, they would go straight after him. Piece of trash. Well, here's the thing. Adam Aaron had a movie theater company, okay? It was operating at a $200 million a quarter loss, and they had about $1 billion, which means they had about 5 quarters of life. When these plays started, Adam Aaron had about $6 billion to start with. Ryan had like 1.2. He was able to get rid of it, raise more capital, put billions in the bank. Amazing job, good on him. Now, Adam Aaron obviously wasn't able to overcome the $6 billion debt, but you can see the difference on what I'm saying. Like I said, I'm not saying one's better than the other. I'm just proving to you guys they're CEOs. All of them. Every single one of these guys are rich CEOs. What they're going to do is in the best interest of the company. And if you look at what is happening with GameStop and what is going on, and we're going to break this down in a second, Ryan is going to pile as much cash as he can. When Roaring Kitty came back, they talked about the dilution. He was all for it. If you've watched his older videos back in the day, he talked about dilution, adding shares. So he was all for it as long as it added value to the company and they were able to do smart things with the cash, yeah, and bring back that value. He didn't care. He was all for it. I'm not saying, that's what I'm saying. Dilution, when Adam Aaron said the word smart dilution, everyone would destroy him. Now Ryan's been doing smart dilution on the other side the whole time, and everybody praises him for it. They're both doing the same things. They're just in different financial situations. Adam Aaron also, like I said, he had no choice. But to either dilute to offset the hundreds of millions in losses, or to just lose his company and lose all of his reserves and just call it a day. And he could have done that right away. And that's my point. Like, all these people, if he wanted to kill the company, he could have done it multiple times over. Now, when you go ahead and break down this report, like I said, their net sales dropped 360 million. What have they been doing? They've been closing a ton of stores. Ryan in the last 3 years has came up with 0 new revenue streams. They tried an NFT marketplace. It didn't go anywhere. They're still the same exact company they were. There's no new revenue stream from when you first bought the stock to now. They're now talking about going back to old consoles. Like I said, it's the same business model that's always been there. They've been closing down stores. If you go ahead and look at all these numbers, like I said, the company itself still operated, at a loss. On top of that, if you look between last year, everybody's, oh my God, we're profitable. But you actually operated at a larger loss than you did the year before. But what offset it is if you look at the next column, other income. There you go. The other income has drastically went up. Your interest income has went up. And where do you think this is coming from? Ryan doing T-bonds. This is what he's doing with the other money. My buddy Ryan Riggs and me were talking over Twitter today, and that's exactly what he said he's doing. He's going to go into the treasuries. He's going to go into money market funds. He's going to get, even as Tony DeNaro put it, you do it under the 90 days, and it's in a different column. And then that's all you need to do. You need to continuously generate revenue off that money. So right now, the store itself is losing money, and you can see it's losing even more money. Next quarter, it's video games. That's the thing that's so hard to predict with GameStop. It might have a shit quarter, and then have a great quarter, then have a shit. I mean, it's not like there's all these new games people are going to be rushing out to get. How many people are wanting to go back to old consoles? There's been old consoles available everywhere. Is that going to make, you know what I mean? Who knows what their revenue stream is? The reason, one of the things I like about AMC is I can kind of look at the box office and predict what the revenue stream is. With GameStop, you're going to have to sit there and wait. So right now, people that are upset about dilution, GameStop is still able to go ahead and dilute up to 1 billion shares total. So he can still dilute, and he's going to. And what's going to happen is every time you get these little raises, he's going to, as he's shown you, he's diluted 3 times in the last month and a half. He's going to stockpile that cash, look over and say, all right, I'm going to keep investing. We're going to keep gaining more money. I'm going to put more of that into these T-bonds, into these money market funds. It's more generating income. It can instantly offset any operating losses of the company that we incur, even if they get greater and greater. And in the meantime, we're gaining money. We're gaining money. We're not losing it. And this is why they gave Ryan the ability to do that free investing, and everybody was excited. So basically what GameStop is becoming is an investment firm that has a stockpile of $4.2 billion. That is what they are right now. And Ryan's looking at it like, I can go ahead and do this. And what this does is it gives them profits, as you can see. Let's go over to the assets. So what it does... Sorry, I'll put all this stuff down here. Hold on. It's right here too, man. Got a little cotton mouth here. Give me 10 seconds here. So, what it does here is it moves. Where is my... Hold on, I have to pull my monitor real quick. Passed out. I was gonna make sure I thought I heard him. Okay. What was I going over? Oh yeah. Sorry, here we go. I was back at the mark. I was talking about the T-bonds and moving the T-bonds and the columns that it comes under. So when you look at the T-bonds, sorry about that. So when you look at the T-bonds here, he was talking about why is the marketable securities dropping? Why is it dropping? And then you can look over and see cash and cash equivalent going up. It's because when you do the T-bonds and the money market funds, it's no longer under marketable securities. It comes in as cash. So it's under a different column. So this shows you that he's investing in those T-bonds. And that's exactly what we figured he would do. The day that he had all this capital, first thing he said is he's going to go into treasury and money market funds. And that's what I've been telling people to do, all of you for retail to do forever. Getting these money market funds, all this stuff. The percentage, if you can get these bonds, 90-day ones, the percentage that you're looking at compared to sitting in a bank, you're talking about 4.5%, 4.6%, 5% in some instances, 5.5%. Compared to 0.01% at a bank. It does you no good to be in a bank. The only thing you do is make sure you have enough money in the bank to pay your bills. Because it's easy just to have it in your deposit, your checking, just to pay it off. Everything else, get the fuck out of there and go into a credit union. There is so many other ways to park your money or put it in other places that you can make such a bigger investment. It's so stupid to just have your money sitting in the bank. But back to this. So, again, Ryan right now is buying himself time to decide which direction he wants to take the company, and he's going to continuously do capital raises here and there, and I'm not saying he's doing massive ones. He'll do like 20 million, he'll do 20 million. I'm not going to say, when he'll stop it at. I have no idea. He'll stop it when he feels comfortable about how much they're making, how much they're generating. But yeah, he's pretty much going the Warren Buffett route right now, and they're being an investment firm type thing and parking as much cash and then going and moving into the T-bills. And now that's what you're seeing. Buffett, again, he sold another $230 billion of Bank of America stock, and guess where that's going to go? Money market funds and T-bills, right back in the same place Ryan's going. This is where all of the rich people are going, because that's where the money is. The guaranteed easy money is being made. The easy collateral, it's right there. It's right in front of you. Nothing's better than a government-backed bond collateral. You're feeling great. You love it. So, anyone that, people like I said, when I said Ryan doesn't know where he's going with GameStop, I didn't say he doesn't know what he's doing with the money. He knows exactly what the fuck he's doing with the money. Clearly, he's making a profit, and you only made a profit because of what he did with the money. So again, GameStop is, people wonder why he made this $400 million. One of the reasons I could think of this is, okay, maybe their net sales, maybe their next quarter earnings are lower. Maybe their operating losses are actually greater. How can you offset that by more? You can gain more money and go ahead and invest that and get that guaranteed income. Get that guaranteed generated revenue, and you'll offset the losses, and you can keep reporting better earnings. And that's his job, is to keep reporting better earnings, making sure that they have a big reserve, making sure that they're doing the right thing with that money. And until he knows exactly what to do with that cash, he's going to do a couple more raises when he sees an opportunity, when the stock he feels is above value. Now, people are asking me what I think the stock price will go to at this point. I don't know. I told everybody before this thing I saw about a 16% move one way or the other, doing the math. But now with this dilution, I mean, it could go down. It could pop back up a couple bucks. I mean, it's hard to say, but I mean, I could definitely, see it going back down to 20, 19, high 19, sitting there for a little bit. But we'll see what happens. But like I said, if you look at the numbers, operating costs, losses went up. Interest income went up. So the money he's parking on, like I said, I mean, you see what's offsetting the losses in the company. So, but like I said, anybody that's looking in GameStop right now, that is what they're doing. They're like an investment firm. And if you think, them just having this money, piling it up, and that's smart. This is smart for them to do because it gives them time to say, all right, we're going to continuously generate income. And again, we have all the time in the world to decide exactly what to do with this. We can go ahead and maybe take we can take a gamble here and there, that's the thing. This opens up the world to GameStop. So again, is this bad or good temporarily? I don't know. They're going to do more dilution, I believe. And all these people that, like I said, and then what they'll do is keep stockpiling that cash and then keep doing into this. And then, like I said, change their company into whatever they're going to change it into. So that is what I see going forward for GameStop. But yes, a lot of people were upset about this 20 million, did not understand why they did it when they already have 4.2 billion piled up. But, and like I said, one of the reasons that they could have done it is they see a bigger operating loss coming next quarter, and you want to make sure that Ryan gains enough capital to invest to offset that loss and actually make this a more positive earning next quarter. Does anyone have any questions at all about GameStop? But this is my point. Adam Aaron, Ryan, they're going to do what's best for their company. That's their job as CEO. The thing is they don't sit there and look at this play and go, oh my God, I got to worry about my shareholders squeeze. What they do is I got to create shareholder value. And if I lower that value temporarily to build it up later on, and if I gain the right amount of capital to do this, the share price will reflect on it down the road. It will gain them value, and it'll gain the company value at the same time, and it'll put us in a better position. So, I mean, that's what these CEOs will do. When they see spikes jump up, it's not one was out to get you and was working with the shorts. It's not, well, Ryan loves the company because guess what? Ryan is, he's young and he's buying the stock and Adam Aaron's not. Adam Aaron, almost all of his pay comes in compensation, in stock. And he's 70, like, I don't even know how old he is. He's over 70 years old. So when it comes to where Ryan is and where Adam Aaron is in life, that has more to do with one guy going, I don't believe in the company. No, I'm 70 years old. I'm about to retire. I'm getting ready to do this and just fade out into the sunset type thing. Compared to Ryan's in his fucking prime. He's ready to go. He's going to back his company. I mean, like I said, it's just different positions. It's not one, like I said, one working with the shorts, one doing this. We need to all realize it doesn't matter what fucking horse you bid on. We're all running the same fucking race. We're all watching the same race. It doesn't matter if you pick GameStop, cost, this, that. If you are retail, that is, I'm buy and hold, I'm ape, I'm standing against this, I'm this movement, you're all in the same fucking movement, which I don't understand. The hate between GameStop and AMC, and then, you know, I participate in it because I get attacked by these fucking clowns all day, and then eventually I'm like, all right, dude, you love it when one guy does it, you, like, can't stop gargling it down, but when the other guy does it, it's because he's working with the shorts. At some point in life, you need to realize this is what CEOs, that's what they do. If you're an AMC, if you're a GameStop listener, and this is your first time listening to my channel, in 3 years, I have told you every time I thought Adam Aaron would dilute the stock, and I told you he should have, or you wouldn't have a company. If you're an AMC, if Adam Aaron wouldn't have diluted, and if he wouldn't have created Ape, you want to complain about how bad your stock is down now, but without doing that, your stock would be at zero. He would have depleted all of his reserves already. It would have got to the point where he wouldn't have been able to make payments, and guess what? You wouldn't even have a play to begin with. The problem with AMC, like I said, you guys jumped into this play. We expected a squeeze. It jumped. People expected a second squeeze. That second squeeze never came. They didn't look at the financials of the company. When we were screaming about, we are burning $200 million. It's a big deal. We got to help them survive. You're helping Adam Aaron. Oh, Marco Hodes. Oh, Biggums is paid off by Adam Aaron. No, I'm just not a fucking idiot. I just understand that a business needs to make either revenue or they need to raise capital to offset their losses. It's just business fucking 101. It's just how it works. You don't just get to say, well, we're in a squeeze play, so hold on to creditors and debts. That's not how it works. Again, I don't care if you're an AMC, I don't care if you're in GME. 90% of you guys are in the same fucking, you're in both. I was in both for a long ass time. And then I saw every time it would run with deep fucking value, or when Roaring Kitty would come back, it would run up a couple bucks and you realize a dilution happened, something would happen, and drop right back down. Guess what? You know what? Last time I went up a couple bucks, I sold my GameStop shares. I see what's going on, and I'll buy back in. I'm going to buy back in when it's about 1960. That's why I'm talking about GameStop today. Guys, I plan on buying back in GameStop because I'm looking at it long term that I can make a value play. Ryan, well, if he, I'm going to wait maybe a little more dilution, see what happens here, because I believe he will dilute again. But again, right now you need to realize if you're invested in GameStop, you're a brick and mortar retail gaming store that is losing money. I don't care that you are profitable. Your core business is what I'm talking about. Your core business is losing money. You're closing stores and you're making $360 million less revenue in your core business. Ryan now has the capital. He has the ability to invest in T-bonds. He has the ability to go into money market funds. He has the ability now with that much capital and the knowledge to make sure he can offset that. So currently, if you're saying, all right, I believe GameStop will be able to keep offsetting losses, and that until they figure out which way they want to take the company, and I believe when they take that company this way, it's going to be insanely profitable, and they're already going to have billions stored up in the meantime. So again, people will sit there, oh my God, again, I'm going to invest in GameStop. I have nothing bad to say about this because I made my profit when last time Kitty came back, and I will go ahead and get back in. And this is what I'm saying. A lot of people, oh, if you're not buying, hold. You guys, I've been trying, like I said, next week I'm going to go ahead and put out my videos. I'm going to show you guys strategies. We don't have to sit there and just buy and hold. You guys, you can have a core amount of shares that you go, I'm not going to fucking touch these. But then you can go ahead and say, all right, I'm going to buy on, you can see run up. You guys, you got to learn TA. You guys, there's things to learn, which I'll show you. There's strategies. Like I said, you guys have shares. You can do covered calls, that you can do cash. Like I said, we'll get into a lot of different things we can do. But if you're just sitting there and you're buying and holding, and you're just sitting there every week, you're watching the money go up, your share go up, your hard gains. Like I said, it's just like with Bitcoin and everything else. You can play run-ups. You can play things. You're not against the movement. Here's the thing that pisses me off. You're not against the movement by making more money and then buy. Listen to me. You're not. If you buy shares and you sell them at a profit and then you reinvest back into the fucking company, what do you think Roaring Kitty is doing? He's accumulating shares by doing that and with options. That's what he's been doing. Is anybody going to go, well, fucking A, he sold, he made money over here at this point and did this and that and then fucking bought back in? What a shill. No. That's how he's built up most of his fucking portfolio. It's smart, and that was the stupidest thing that ended up happening. Everybody sat there, and anybody that was trying to learn TA, all right, here's what I'm going to do on my channel. The thing I'm not going to do is show you a fucking chart. I'm not going to show you charts. I'm not going to show you TA when I show you my videos next week. Go fucking learn that. Go learn that on your own. I'm going to show you trading strategies. If you have shares, if you have this, and you decide what the hell's best for you. I'm not going to tell you what's best for the way to do anything. I'm just going to show you. I have about 7 options, and I'm going to write down on the whiteboard. I'm going to break them down for everybody. I already have about 7 different strategies, and I'm going to show you guys that you can start to try to do if you want to. But like I said, we're all running the fucking same race. We all want squeezes. We all want MOAS, and we all believe it will happen through AMC, GameStop, and all these other fucking meme stocks. We're on the same fucking team. Both of our CEOs have diluted us into the fucking ground. Adam Aaron did it to survive. Ryan did it now because he saw he had a failing business, and a way he can offset that failing business is by stacking a huge amount of cash, making the interest, and investing in T-bonds and investing in money market funds. Ryan, good job. Because it's just like I told everybody who invested in AMC. You have to understand the company's fundamentals as well in a squeeze play. Everybody sits here and goes, well, GameStop has all this money stockpiled forever, and no squeeze happened. Yeah, you're right. GameStop had all this money stockpiled, but they were still operating at a loss. They still haven't came out with a new revenue stream in 3 years. They still haven't given the shorts or anything that like, hey, you're fucked. The shorts are looking at it going, all right, we're stuck in this point. They've hedged it out a little bit more. They've hedged it out a little bit more around these run-ups. Through offerings, through the dilution, just like everybody wanted to complain about Adam Aaron. Well, guess what, GameStop shorts? What do you think they did with when the prices dropped? They fucking re-hedged positionings, they re-fucking calibrated, and they might, yeah, of course, they took some losses, but then they repositioned it back, and they wrote it back down, and that's what they fucking do. That's what their algos fucking do, and then when they re-short it, it's repositioned lower and lower, and that's just what they fucking do. So, again, all of this is done in through the derivatives. It does not matter if you're in GameStop, if you're in COS, if you're in fucking AMC. I have said since day one, if you want a MOAS, you can't squeeze one hedge fund. You can't squeeze 4 hedge funds. You can't squeeze 5 hedge funds. You need to squeeze tons of hedge funds. And it's the same exact thing. We went over last time. We're going to get into this in a second. We're going to go over the Endgame rules because it's a big fucking deal. Wall Street, like we went over last time, you guys, the answer is right in front of your face. I'm going to show you it every single fucking video because the answer will always be in front of your face. I can't necessarily say a bank run or incentivize them, but I can inform you about what bank runs do. So, again, if you read this, this is the most important fucking piece of news you will see ever in this play. This is it. This is literally them saying this is how you win. This is it. This is them going, all right, if retail wants to win, here's who you go after. There is a margin loophole. This loophole is worth $4.5 trillion. This is how they have not gotten margin called. This is why Robinhood and all of these brokers haven't fucking margin called any of these hedge funds. Because it's no longer up to them. And I've told you that since I've told you guys this about a year and a half ago. It's these hedge funds have maxed it out with all these brokers. They're not borrowing from them anymore. They're not on margins anymore. What they're doing is they're going to fucking banks, and these banks are now what they are using their margin. The banks are what they're using their loans, and the banks are what is fucking doing everything. Because in the end of the day, what this does is if these banks or if these hedge funds go out and get these loans and all this stuff backed by these hedge funds, and these banks go under, it's the taxpayers paying it. So in other words, taxpayers are now backing hedge funds. I need you guys to understand that. With this, taxpayers are backing hedge funds because instead of going through regulation where FINRA can track their margin requirements because they're not going through broker dealers but going through banks through ISTA agreements like I told you 3 years ago, what this does is it goes around FINRA's ability, as you can see, to fucking see how much margin is in there. But what they aren't able to show you is that $2.348 trillion is loaned out to hedge funds from systematically important banks. Is the fucking banks. Everyone that wants to bitch at me and whine about phase 6. Congratulations, I was right. But the problem is they don't abide by the rules. So you want to talk shit to me because I showed you what the rules stated and they don't follow the rules? Congratulations, you're a fucking idiot. I don't give a fuck if it didn't work. According to the rules, this right here should have been exposed. That's what the rules were fucking meant to do. But instead, they own the World Bank. Congratulations, I found out more information, and the World Bank doesn't give a fuck. Phase 6 was literally meant to show $2.3 trillion. Now listen to me right now. This is why I told you Phase 6 was going to cause a margin call. This is exactly why I said it. FINRA currently's margin debt, because this is what they go through broker dealers. This is what FINRA can track. Margin debt stands at $784 billion, okay? That's what FINRA sees as margin debt. In reality, there's an extra $2.34 trillion on the side from ISTA banks. that was supposed to suddenly be tracked by FINRA as well. And now it's not. Now let me ask you a question, and let me see, am I stupid here about the Phase 6 rule? If Phase 6 was supposed to transfer this number up to here, did you not agree with me? Logically, if this 4, 5, 6 times itself, there wouldn't have been margin calls. God, what an idiot for thinking Phase 6 was going to do anything. There you go. I'm sorry that I thought $2.4 fucking trillion that was suddenly going to go into the light would have maybe caused margin calls. What a fucking idiot. Again, this also doesn't count the other important banks that aren't systematically important, so aren't too big to fail, but are banks, big banks, medium-sized banks. There's another 1.6 trillion out to those guys. So in other words, a total of another $4 trillion was going to be exposed from Phase 6 to this number. And people are like, whoa, what a dumb fuck for thinking that there would have been margin calls. Oh, I'm sorry. I'm sorry. But again, like always, like we'll get to with this, the Endgame rules. They just fucking cheat. It's not that I'm wrong on this stuff, because logically this is correct. But this is the thing. I might say something, but at least when I'm wrong, I show you why I'm wrong and how I was actually right, but how they just fucking cheated around it. Then I show people the exact loophole that they do, and they say, you're just making up an excuse. If I show you footage of a criminal robbing a bank, how are you going to tell me I'm an idiot when I show you how they robbed the fucking bank and I showed you the footage? What? You know what I'm saying? This is my point. Like, people crack me up, dude. The trolls and shit, like, what are you talking about, dude? But this is the point. In the end of the day, I can't incentivize bank runs. But look at this. Listen. GameStop, AMC, I don't care. COS. Every other fucking meme stock out there. Whatever you're in, I don't give a shit. Even if you're in gold, we know the size of the gold short position these banks have are unbelievable. The answer is still the fucking same. If a bank run hit these 3 fucking banks, it would be the end of it. Now here's the thing. Listen, this is the most important thing I've ever said on my channel. You don't even need to fucking run on these 3 banks. If there was a bank run, if a bank run so happened, sorry, I can't say if, I can't incentivize. If a bank run randomly happened on Goldman Sachs, Goldman Sachs is over leveraged by 3.8% or times. They're over leveraged by 3.8% times. They're reporting another $400 million loss. Bank of America is having a whole bunch of I'm sorry, not Bank of America, Goldman Sachs. I apologize. I meant to say Goldman Sachs. Goldman Sachs is having a whole bunch of problems. If you didn't see today, also, JP Morgan and all these guys are talking about, these banks had a lot of problems. If you look today, JP Morgan actually dropped 5%. They were down 7% at one point. But the thing that's trying to save them is these endgame reforms that we'll go over in a minute here. But again, Goldman Sachs is in a lot of trouble. If Goldman Sachs just happened to have a whole bunch of people pull out, it might be the one to, it might literally be the biggest domino that anybody could push. And unless there's a massive bailout, because if you read this thing, listen to me. I want you to listen to me if you're in retail. How do you get a MOAS? You have thousands of hedge funds get margin called. How do thousands of hedge funds get margin called? Goldman Sachs, Morgan Stanley, and JP Morgan Chase service more than 1,000 hedge funds. As of 2022. This number's jumped up. It was like 2,700. Hold on. All right, let's see here. Pull up these right one. These guys, they're about like 1,400 hedge funds combined. So these guys, and if you read the bottom as well on these reports, once again, 40% of the hedge fund assets is overvalued or independently valued, which means when you guys see those reports and everybody sees at fair value. Remember Citadel's bullshit? Security sold, not yet purchased, at fair value. That's what they're talking about. These guys are valuing 40% of their assets, and they're going to overvalue 40% of their assets, which means how you take down one of these three. That is, one of these three goes down. That is how you get hundreds of hedge funds to get margin called. And that is what a MOAS type squeeze is. You have never in the history of life seen hundreds of hedge funds get margin called at once. This is how you do it. Now, I know a lot of people are like, well, blah, 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 but that's how you do it. That's your answer. Can you organize it? Can people come together? Can people stop fighting over their fucking stocks? Can people stop saying one CEO is better than the other because they're in completely different situations? One guy started with 1.2 billion, the other started with 6. One had to dilute to fucking live. The other one's diluting when he has tons of money on hand. But again, Adam Aron will start posting profits now because the reason he wasn't posting profits was box office were down. Adam Aron will be posting profits. GameStop, the company, the core company, the brick and mortar store that you walk into is operating at a loss. But he's offsetting it with all the money that he's raised through, again, T-bonds, money market funds, and the interest alone offsets it. Exactly, Tony. On top of that, GameStop didn't close during COVID. I mean, there's so much stuff where it's like, you cannot compare Adam Aron to Ryan. You can't compare any fucking CEO actions to another one because their financial situations and company, circumstances are always completely different. So they have to make different moves. Adam Aron diluted to survive, not to help the shorts. If he wanted to help the shorts, he wouldn't have fucking diluted. He would have just ran the fucking money out. He would have ran it out. Guess what he would have done? He would have sold a majority of his stock, and then he would have let the company slowly burn out. That's what he would have done. It's logical. It's make as much as I can on the way out of the door and hope something happens and just say there's nothing we could have possibly done. We need to file bankruptcy. That's what he would have done. But instead, he goes, nope, we're going to actually try and survive through this bullshit, get it to the point where the box office returns. Again, this quarter will be profitable. AMC will be more profitable this quarter than GameStop at 14 million. AMC will be more profitable this quarter than GameStop will be. I think AMC will be more profitable than GameStop in Q4 also. Again, the only thing that held AMC back was box office. It's a fucking theater company. If they don't have content to attract people to their theater, they're going to lose money. It's just how it works. And they're both doing the same thing. Ryan is closing down a shit ton of stores. Adam Aron's closing down theaters as their leases run out, and they're reducing cash burn. Adam Aron's reducing debt as much as he possibly can at opportunities. to, again, lower interest payments, lower cash burn, and get back to a point where they're gaining profitability to now not only withstand their debt and their interest payments, but to pay down extra while putting away more capital and still upgrading the company. That's the goal. That's always your goal. That's what they're going to do. That's their job as a CEO. I've said this for years. And then you're just sucking his dick. But then when Ryan does it, it's, well, he made more money, so it's okay. No. There's no fucking difference. Other than Ryan has fucking roaring kitty that can instantly do tweets and come back, and he's shown you. People want to sit there and be, you got this idiot Nick guy going, oh, well, fucking, I can predict the algos. Anyone that tells you that they can predict the algos is an idiot. Because 99% of the fucking time, they're wrong. And when they're wrong, they just ignore the fact that they've been wrong the last 7 fucking times and then go, well, guess what? If I'm right on number 10 time, 1 fucking time, I've figured it out. You will never figure out Aladdin, you idiot. You will never figure out fucking what Aladdin's doing. If you can figure out what a multi-billion-dollar algorithm is doing, you need to be working for BlackRock. You need to be creating your own algorithm. If you're smart enough to understand how his algorithm's operating, the world's most intelligent fucking algorithm, the best algorithm out there, if you understand how it's operating, why aren't you fucking creating your own and just destroying it with the rest of them? Like I said, no one's figuring out the algo. You can fucking see support lines, demand lines. You can watch and kind of get ideas and then make small predictabilities. And that's what most of these fucking people do. That's what you do with it. That's what you do with TA. Yes, you can get trends, you can get all this, but it's never a guarantee. Anything can change at the blink of an eye. The second a market maker, somebody wants to attack a stock, they fucking can control it. As we went over last time, they can also control it with layering. It just takes a phone call for them to drop a price a couple bucks quick. 2 companies can do layering. 2 companies can do spoofing. AMC, you have nonstop spoofing from fucking Goldman Sachs. The amount of spoofing from Goldman fucking Sachs on AMC on a daily basis is the most criminal thing I watch on level 2. I watch it on level 2 every fucking day. I'm literally watching Goldman Sachs spoof the shit out of AMC all day long. And I'm sitting there thinking to myself, I'm watching this live, and I'm literally watching them spoof it fucking live, dude. So what the fuck is the SEC looking at? If I can watch this, and I can literally show you guys pages of fucking Goldman Sachs spoofing AMC. Does anyone give a shit? No. Like I said, it's a fucking joke. It's a gong show. Goldman Sachs is the... You have 3 fucking... Right here, you have 3 heads of the snake. You have that serpent. What the hell's that dog called? What's that dog called that guards, what's the devil's guard dog? 3-headed. What the hell's that thing called? Cerberus. You know, we're going against Cerberus right now. We got this 3-headed fucking dog, okay? You have this 3-headed monster. The problem with retail, here it is. Here's the thing. Retail has it wrong. It's not 99% versus the 1. It's not. It's 99% versus Goldman Sachs, JP Morgan, and Morgan Stanley. They support the most hedge funds. They're the backers of your enemy. They're the head of the snake. Everybody asks who it is. It's these 3 fucking banks and prime broker. It's these 3. Goldman Sachs, Morgan Stanley, and JP Morgan Chase. They back over 1,000 hedge funds. Right now, we got this dog here. Look at this thing. It's fucking badass. It's scary as shit. It's super powerful. It's super scary, just like these 3 banks. You think it's too big to die. You know, you can't kill this thing. But you can. You gotta start with one of the heads, though. Right now, JP Morgan Chase is the middle head. You're not getting JP Morgan Chase. They're the biggest criminal. They're the fucking master. They're the one with the brains. They're the one supporting Jeffrey Epstein Islands. They're the biggest criminals of them all. JP Morgan Chase is in the middle. They're trying to do everything they can to safeguard JP Morgan Chase, because if they go down, if JP Morgan Chase goes down, the entire fucking financial system goes down. The 99% could literally take down the entire system as long as they organized and took down JP Morgan Chase. Period. That's it. That's how the entire system could go down. JP Morgan Chase is over here. Got Morgan Stanley over here. You know, he's on the other side of you. It's going to be a longer reach. It's going to be hard. No, we'll do it this way. This is Morgan Stanley. You know what I'm saying? Because if he's coming at you at this angle, you're going to have to be swinging with your left hand. You know, most people are weaker with their left hand. Most people are weaker with their left hand. It's going to be harder to hit this fucker too. But over here on the right is Goldman Sachs. There's vulnerability over here in Goldman Sachs. You used an arrow, you shot this bitch right in the eye. This head over here, as you can see, even look at this picture. You see how he's got one eye? You can't see this other eye? You shot that shit with the bone arrow. They're weak right now. They have vulnerability. You strike this fucking head off, it might be enough to kill the beast. But it's going to be enough to where this is going to do such damage by taking off the third head, dragging down the other part of the body, that they're going to be so fucked up because they're so intertwined. The rest of this beast, it ain't ever going to be what it once was, that's for sure. But that is our fucking answer. Goldman Sachs. Goldman Sachs, my friends. Now, I can't say run bank runs. I can't incentivize them. But if one so happened to happen to Goldman Sachs, from everybody in retail, no matter what stock you hold, you can now take down the beast that holds the key to your MOAS. That every one of you rightfully deserve at this point. The amount of corruption that we've endured is fucking ridiculous. So, speaking of that, before we finish this off, the Endgame rules have been revised to basically pathetic. Months ago, I told you guys, this guy right here, Martin Grunberg, he was the final vote that would stop the Endgame reproposal. He told them that he's not going to repropose it, and he wants the Endgame rules to be written as is, and he was the final vote that said no. 2 weeks later, Banks hired an independent reporter. This independent reporter said that there was sexual allegations against this man, and this man had 108 complaints of sexual harassment, but he was covering it up because he was the head of the FTC and no one could stop him. He said sexual harassment with this man was running rampant because he was the final vote. As you can see, Grunberg held the deciding vote at the FDIC last July when the bank regulators approved moving forward with the proposed rules without the mega banks and without them revising it. He wanted to keep it as is. He wanted it to go up to 19%, which would have killed the mega banks. Okay? 2 weeks later, since they couldn't bribe him, they tarnished his name and got him fired. Now, what happens? You have the revisions come out, and the revisions are the biggest joke I've ever seen in my life. I knew they were going to gut it, but I didn't think they were going to gut the endgame rules like this. This is fucking ridiculous. If you come over here, go ahead and post this. This is on the federalreserve.gov. This is their own website. This is the recording of their meeting today of the new proposed rules. You can't get a better source than this. Now, if we go ahead and read it, I'm not gonna read the whole fucking thing because there's a ton, and I'm just gonna go over a ton of the highlights because it's a fucking joke. It's the classic joke. Now, if you come down here, it talks about, this is where we'll start because this is where it all starts to become a fucking gong show. Listen to this part. The changes in the Endgame reproposal will cover all major areas of the rule: credit risk, operational risk, and market risk. Banks with assets between 100 and 200 billion, which in other words, JP Morgan Chase, Goldman Sachs, Morgan Stanley, would no longer be subject to the Endgame changes, other than the requirements to recognize unrealized gains and the losses of their securities in regulatory capital. So in other words, they don't need to worry about the credit risk that's involved in the new Endgame rule. They don't need to worry about operational risk anymore. They no longer need to worry about market risk. It no longer applies to these guys. The 3 that it was going to hurt, and the 3 that it was going to cripple, and the Cerberus, it was going to fuck him up. So now they just said, don't worry about it. We're not even going to have any of these rules applied to them. So now this means only small banks and medium banks and some larger banks will be subject to this rule. Okay? So what that does is put pressure on the smaller and medium banks, which means more of these smaller and regional banks are going to get fucked up. And that means these bigger banks are going to be able to absorb more of these smaller banks. And that's exactly what they're going to end up doing. Now, I want you to listen to this next line because it's so fucking ridiculous. These changes reflect the feedback we have received from the public. So they're saying the public had an outcry that we wanted the big banks between 100 and 250 billion. We as people, we the public, demanded that they're no longer involved in the Endgame rules. We demanded that they don't be subject to the changes because we as a public don't want them to take on the risk. That is literally what they said. The public is demanding that we let the banks with 100 to 250 billion off the Endgame rule changes. We're demanding it. This reflects the feedback we've received from the public. Who's the public? Their shareholders? Like, what? No, it says they were going to move it from 19%. So now what they're going to do, instead of 19%, they're going to lower it down to 9%. So basically the larger, the middle banks are going to be down to 19%. Now, if you look at this, so the bigger banks, the ones that aren't subject to it, their reserve requirements will go up, but not like everybody else. Their reserve requirements only need to go up about 3 to 4% over the long run. So it's like eventually it needs to get to 3 to 4%. Okay? So in other words, the big bankers basically, there's no fucking, they have no problems. They'll slowly let them do their reserve requirements. It'll be up to about 3 to 4% while everyone else gets 9%. When these guys are the fucking pieces of shit who take the biggest risk and have the biggest derivatives, and this is who the Endgame rules were made for. And now the people that they're made for are basically immune to the rules. So what are we doing? You're just fucking punishing middle and small banks. Well, now what they're doing, and listen to how fucked up this is and how stupid this is. So one of the things they want to do, where the fuck is it? Here it is. Okay. So one of the things they want to do is to lower credit risk with the banks other than fucking lower their reserve requirements. They want to basically lower their credit risk. And how are they going to do that? They want to do changes in the capital requirements for, listen how stupid this is, and think about the times that's happening right now. They want to lower the requirement risk and credit risk for real estate, residential real estate, and loans tied to fucking commercial real estate, which commercial real estate and residential real estate is fucked right now. So what this means is they want to get rid of the 20-point basis, okay? They want to get rid of the 20-point basis rule. And what that means is for every $100 of that loan total, the bank will need to put aside $20 in a reserve to back that loan. In case the loan defaults, they don't have to absorb the entire loss. Okay? It's to protect the bank, the investors in the bank, the shit, all that. It's, help offset the risk in case it goes under, to make sure that it doesn't, fuck up the bank, the rest of them, put them under, do some kind of thing. You know what I mean? Because if you have all these losses on tons of these loans and you don't even have that 20% little backing, it could super affect you. Compared to if you have the 20% backing, at least you're not taking a full hit on it all. Well, they want to get rid of that 20-point basis rule, okay? And this is what they say. If we make the banks not hold that 20%, they'll be able to give out more loans. Well, here's the problem with that. That means they're just taking on more fucking risk and having no collateral to back the fucking loans. And you're in an environment where defaults are higher than fucking ever. Everyone is fucking defaulting now. People can't afford to live. I just showed you all the problems happening in commercial real estate. And now they're all defaulting, and you're going to say, have less reserves in case of defaults, and just give out more loans. That means these banks are going to be taking on more unbacked leverage. Well, then what it says, it talks about how, well, it'll help give people more loans, right? And then in the same fucking breath, because this is what this guy is talking about. This is what the chairman, Supervisor Michael Barr, has been saying. This is his speech, okay? This is his exact words. He comes down here and says, we're going to lower this, and it should make it more available to retail to be able to get these loans. And then he says right after, but according to our analytics, it could actually maybe potentially make it harder for people to get these loans because the supply currently is so low and the housing market situation is bad that if they add a couple more, if they add the demand to offset, the small supply, it'll actually raise the houses and raise the risk. And then these guys will look at it and go, well, the loans they're more amount, so we're not going to give them up. Yeah, it's a little less risky, but now it costs more. So the risk that the 20-point takes away, the loan costs more. So guess what? It equals it out. And then it says in the next line, this might make it to where they actually don't give out more loans. Okay, well, if the purpose of this was to give out more loans, and now you realize that it actually offsets, and they might not give out more loans, and the only change now is you're taking away their 20%, the $20 for every 100 they need to set aside. The only change you've made is now these guys don't have to have backing for their loans at all. You see what I'm saying? It's unbelievable. You guys come down, it talks about equity exposure, the way that they can now get away, the revised lower risk would weigh these exposures of 100% would reflect this lower risk and be consistent with the approach we take for other tax credit investments. These guys are finding, they're literally like write-offs. The what they're doing to the Endgame rules is just saying, all right, instead of the things that were supposed to stop us, let's create more loopholes to make it to where everybody just has to have less requirements. They've literally turned something that was supposed to make them have requirements to now basically getting rid of them and getting rid of all these side requirements that were massive, and now basically raising it to about 3% for big banks who actually need these capital rules in which they were created for. It's now making it go up to 9% for medium and smaller banks who already are in trouble. So it's now putting them underwater. It's adding stress to the financial system. And it's once again just giving relief to the big banks. Once again, they made the endgame rules do nothing. Look at their market risk and derivative risk. It now adds more loopholes for these guys in their derivatives into their market risk. They talk about all these lessons learned from the 2008 financial crisis and how they've addressed the current framework and blah, blah, blah. And we found ways to do this, but however, we'll clarify. It talks about mortgage-backed securities, Um, it all talks about like if they're by we'll want to do different kind of rules if it's by Freddie Mac or Penny Mac and different type of fucking mortgage backed companies and all this stuff, and it's like once again, this doesn't what they're trying to do doesn't decentivize the problem between these companies and the rates and the requirement for each individual company that is off. Like they're trying to I'm sorry, this shit's just frustrating as hell. It's frustrating as hell that every time they have something that can maybe actually make a difference, it ends up getting thrown into fucking Congress, who's now paid by these guys to make it more. It's just loopholes now. It's literally nothing but loopholes. It literally gave them like 6 fucking loopholes. They're going all the credit changes. Forget every single thing this was going to do. The 6 things that the endgame rule was going to do, it no longer does. It does one of them. It now, instead of doing one of them, or 6 of them, it does one. And the one that it does, instead of it doing the way it should have, they put it to 3 to 4%. They cut it down by 70%. And do a video on RXP. I can look at RXP for a little bit. I've had a lot of people ask me about RXP. I feel like I get asked about RXP all the time. But, like I said, the endgame rules at this point, it's just a gong show, dude. It just now gave him loopholes to help them escape a lot of these fucking bombs that are going to happen. But I just want to let everybody know the changes with the endgame rule. I wanted everybody to see what's really happening with GameStop. If you are a GameStop investor, understand what you're investing in. The core business is operating at a loss, and the loss is actually greater than it's been the previous year. The revenue is actually $360 million less, just for a quick recap. The reason GameStop was profitable and not negative was because Ryan Cohen is taking that money that they've raised, the 4.2 billion, and he's buying treasury bonds, and he's investing in money market funds, which you can see on their asset sheet. And by reading that, you can look at their marketable securities are going down, and their cash and cash equivalent is going up, which is what you would get. So in other words, they're no longer investing in securities, they're now investing in bonds, money market funds, and T-bills. This is how he's offsetting the loss of the core company. And as you can see, you are at a negative 22 loss. You had 40 million almost in interest income, which now puts you at a positive 17.5. You then had taxes, and now you get to your positive 14.8. So again, if you invest in GameStop, you are investing in a basically a firm. You're investing in an investment firm of Ryan Cohen. He's going to keep raising capital, so get in at a good cost. If this is how you play GameStop correctly, you let him dilute. Like I said, it's going to go down to about $19, $19.50, $19.70. When it hits that is you do what you want. That will be my re-enter fee. Ryan right now is going to keep building capital. You can even wait till the next dilution, because again, all he needs to do is just have Kitty do a fucking post, watch it spike up a couple bucks, and he can dilute again. Now, what the dilution, again, recapping, what that tells me is Ryan Cohen expects a bigger core loss, which means the brick and mortar company you walk into called GameStop will have less revenue in the next quarter. It will have a bigger operational loss, and to offset that bigger operational loss and have a bigger profitable quarter and a better earnings, continuously to have to beat his earnings, he will raise capital until he knows the direction he wants to take his core brick and mortar GameStop company that's currently operating at a loss. And what this does, again, it gives him time, it gives him more money, and by the time he's ready to decide which way he wants to take the core company, he will have billions already set aside to back to make sure that they can take it and take the risk. And again, if you believe that when he decides what he decides for the core company, and you think it'll turn around, be profitable, to have billions, they'll be able to continuously make money on this. That is what I'm going to buy GameStop into. I believe when he decides, and if he does the right thing, and as long as he acquires more cash, he doesn't even need to keep acquiring cash. But if he sees the opportunity, or if he sees more losses occurring for the core company, then he will again do dilution. Because again, stacking cash up is the correct thing for them to do right now to offset their losses until he knows what he wants to do with the company. But again, guys, I'm going to be doing a couple streams here again this week. I have a couple things I want to show you, but next week I'm planning on next Wednesday, maybe next Thursday. It all depends on my baby and work and all that stuff. So Wednesday or Thursday, maybe Friday at the latest, I'll get those videos out on trading strategies you guys can try. Again, don't just watch one, watch them all. Look at it. You all have different situations. You all have a different amount of shares. You all have a different amount of cash on hand. You all have different risk factors, gambling factors. You all, you know what I mean? You all will play things differently. Okay? There's no right answer. They're all going to be different for everybody. Everybody will trade differently in life, and that is how it should be. Watch them all, look at your situation, and decide, which one of these would be best for me to try, or don't. Maybe you say, fuck all of them. I don't want to take any risks. I have my stack. I'm just going to hold. I'm going to believe in the movement. I'm going to say everything they're showing me, the DD, and eventually one day I will get my payout. And here's the thing. Here's the one thing I want to say to some people. A lot of people ask me how many people, if they would have never gotten AMC, if they would have never done this, how much money would they still have? And I honestly want to tell you about the same, if not less. Because if you look at the way the economy is going, the way everything's gone, everybody's broken, everybody's living off credit cards. It wasn't because most people... there were people that went in this play, and I warned them day one. If you're going to put your whole life savings in, it's such a fucking risk. It's scary. You shouldn't be doing that with anything. Anything. The second part of the squeeze was never guaranteed. It should have happened. They shut the button off. They've cheated. Here's the thing. We're literally playing. We're walking into a casino. You're sitting down at a fucking, what do they call it? Goddamn slot machine. Sitting down at that slot machine, it's rigged. It's programmed. It's not like they're like, oh god, I have a certain amount of odds every time I pull this fucking leverage. It's pre-programmed on who the fuck wins. Are you just the lucky one to sit down at the time? Oh, sorry. I was looking at my dog here. So, like I said, guys, we can sit here and we can look at how, what the game, what they're doing to rig it. We can complain about it, or we can all look together and say, we're all playing on the same goddamn machine, and it's rigged for all of us. GameStop, AMC, COS. I showed you guys that NWBO lawsuit of the 3,000 spoofing. Other companies, every company out there, it's happening to. This is why I've showed you the amount of companies going public is dropping like flies. It is unbelievable how many less companies are going public. It's not just because they can afford to. It's because other people are understanding that if you go public, you're not going to own your company anymore. You're at the mercy of Wall Street and the banks, and they're going to eat and take your company. If they think it's something that could be successful, if it's something that could harm them, if it's a patent that they could get and they could make billions off, they will come after your company. People are understanding that. And they're going, if I can't raise the capital, I'll find another way. Going public is not attractive to new companies, or especially companies that have valuable assets. It's no longer an attractive option. All right, does anybody have any questions? Again, guys, if you're a GameStop elitist, if you're an AMC, I hope you understand everything I said about GameStop. I wasn't mean about anything. I didn't talk shit about fucking anybody. I didn't talk shit about Ryan. I didn't talk shit about GameStop. I didn't talk shit about the direction it's going in. I showed you facts with numbers, and I told you exactly what the company is doing. I told you what Ryan should have been telling you is this is what we're doing. We're going to take this money we've made. We're going to be an investment firm, and we're going to raise capital, make money, cancel all our operational losses until we can figure out the direction we're going in. The reason Ryan has not had any of these shareholders meetings, they have been so vague, they haven't done anything, talked about any of that, they don't know yet. But they have the money, the knowledge to make the income to get around the losses until they figure out what they want to do with their core business. And that's it. I 100% believe when GameStop drops to about 1980, that is a valuable thing with what, and if you believe in what Ryan can do with the company long term. Is he going to even be a brick and mortar store? Are they going to switch? They could do anything. But right now, what he has done, again, is he's bought them time, money, and he will, again, do more dilutions down the road. So just be prepared for it, my friends. Does anyone have any questions? If not, I'm going to go make sure my wife is okay with the baby. Maybe relieve her of duty, let her go to sleep here. Any questions at all, anyone? Again, I will be going long again on GameStop here. I'll be in both. But again, you guys, there's no reason you cannot trade these stocks that you're in and make profit on run-ups. You can even make profit on the run-downs. It's not going against the fucking movement. When you take the profits and put it back in the stock and accumulate more, that helps the movement. Especially if you can learn these strategies. Think about it this way. Imagine if you could do Tony DeNaro. He's one of the guys that I post a lot. He has a perfect video, and I've posted it on my Twitter, about a strategy. I'm not going to go into that strategy. It's called the wheel strategy. You can go ahead and look into that. He talks about, covered calls, cash secured puts. There's things you can do to collect premiums. You can buy a put if you think the stock's going to go down, and if you make money and momentarily you sell. It doesn't destroy the fucking stock because you went down and made profits on the way down, but you might have lowered the price if a whole bunch of people get these puts, and then maybe it'll go back up the second they rebuy the stock right after. I mean, like I said, there's so much misinformation about like what is against the movement. You making profits and not having to spend your paychecks, and being able to live and stay in the movement, that is more important. You not over leveraging yourself and putting yourself in there like, if I don't keep buying and doing this, well, imagine if you could keep buying and doing it because you know strategies to implement. That's all I'm saying, guys. There are so many things that people could have done to where they were collecting premiums throughout this whole way. And again, for my followers, for my listeners, I apologize. I should have shown you these type of things a long time ago. I should have shown you things I've done, because there's things I've done to, like I said, you're 90% down on your, I'm not 90, I'm not even close to 90%. I had more Ape shares when it went to 77 cents than I had fucking AMC shares in the end of the day. When it was at 77 cents to $1, I was fucking loading on it for like months. As long as it was under that $1, I was flaring it. Every fucking other penny I had to get to, like I said, again, I made money on the run up the first time. And people would be like I said, the people that called me a shill because I made money on the run up the first time. What? So I'm sorry. Guess what? I bought right back in right after. And I bought back in and quadrupled my position at the time. when I told everyone about Ape to lower your averages, guess what? You guys could have doubled, tripled your position and cut your cost average. You have people out there that still have like $80 fucking averages and shit, $200 averages. Imagine if you were buying a whole bunch of shares at 77 cents, 80 cents. How much would your cost average have plummeted? It would have plummeted. 77 cents? When you were the people that were buying in at 50, 40? When you suddenly buy 77 cents, let me tell you, it's not like your average, it cuts massively down. Obviously, depending on how much you buy, but obviously when it's 77 cents, you can afford to buy quite a bit. You'd still be down like 50, yes. But if you would have been doing covered calls, doing like a wheel, as one of his strategies, again, the wheel route, you would have been doing the wheel strategy, you would have been collecting premium on your current AMC shares. And you could have been putting it back into stock, buying it again, and guess what? You weren't doing anything wrong. You were basically making money on the shares you already have. And you were again buying more shares at a lower cost, and again lowering your average. And now you can be down a lot less than your 50%. So again, I just didn't want to become a guy that goes, here, I'm going to show you T8 and then show you what I'm doing and then join my Discord. Because obviously I can't post fucking exact plays on Twitter. But I didn't want to become a guy that's like, hey, come in my Discord. I'm going to show you my strategies. Show you my plays. I've never shown anybody my plays. Nobody knows my positions. No one ever will. It doesn't fucking matter what my positions are. No matter what I have, the amount of shares, somebody's going to cry about it. I could have 60,000 shares and somebody's going to find something wrong with it. Or they'll say, see, you're an AMC shill and you just keep shilling AMC because you're out this and have so many shares and you need it. Like, there's no positive. And I've told this to everybody. There's no positive to showing anybody your position. None. What did Deep fucking Value gain from showing his position? Nothing. People were going to buy regardless. It made the people that were going to buy regardless feel a little warm and fuzzier. That's it. Who cares? People didn't go out there and go, well, fuck, he's got this. People were like, holy shit, he's back. That's what was made everybody go nuts. And then they realized he's not only back, he's got fucking assets, cash. He's going to be back big time. Wasn't a 4-to-1 conversion thought. Wait. Oh, you're talking about the conversion and split? I mean, well, it converted at the AMC's price. So it's like Ape converted into AMC stock price. So it wasn't the other way around to where you're doing the 4-to-1. Am I still buying? Yes, I am still buying. I believe AMC right now is a value buy. All right, this is my point. I don't think the squeeze or any of that crap in the back end or the MOAS and any of that stuff, the derivatives, all that crap, I don't think it's gone anywhere. When I saw the GameStop report, it just made me realize that I was right about AMC, and that's where the fucking main shit is. When people want to sit there and go, well, the GameStop report, blah, 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 GameStop blew up. Yes, GameStop blew up. It had a whole bunch of fucking, in the back end, a whole bunch of the exhaust go away on all of those squeezes. When the GameStop report came out, it said nobody can still dispute it. GameStop exposure was $250 million. AMC was $850 million. There was almost 4 times the exposure of AMC compared to GameStop. And that was in the government fucking report. It was in the GameStop report that most of these people use as Bible. But whenever you bring that up, now you believe what the government says? You do, because you've been using it all day on how this backs your entire argument. And that's my point. You're so ready to hate me because my name is AMC Biggums. Who cares? If my name was just fucking Retail Biggums, would that make you feel warm and fuzzy inside? I will again own GameStop. I will be long GameStop, and I will be long it for a long time. I'm not going to go on to fucking Twitter and my YouTube and go, AMC GME Games fucking Bickums. No. I've been AMC Bickums for 3 years. I will never fucking change my name. I believe AMC will always be the monster play. I believe the AMC exposure in the back end, the stuff we haven't seen, will always be greater than everyone else. And I've seen the amount of people of retail buying AMC stock, the price it's at, the amount of fucking 203B fill before locates that are filled right now in AMC, the amount of AMC shares that are in the CNS program are unbelievable. The exposure in the CNS program to me is in the billions. It's in the fucking billions. Problem is all the loopholes I've showed you in the CNS program allows them to bypass buying those shares for an X amount of time that is not really specific. And whenever they see a loophole, you're damn right they're going to use it. But do I think GameStop can squeeze? Sure, of course it can squeeze. Can it have its runs? Yes, but I also believe when it keeps having its runs, I'm telling you right now, don't be surprised when Ryan dilutes you again for another 20, 30 million shares and drops it each time. So he can keep offsetting this and keep stacking cash and keep investing and making more and more and keep beating earnings until he figures out what to do. Because as long as he's beating earnings, no one's going to complain. And it gives him unlimited fucking time. But again, in 3 years, Ryan has done nothing but close stores down, has 0 new revenue streams, and has lost revenue up the ass. But thank God, retail raised enough capital to where the interest can now offset, and he has no debt. Ryan's entire success, I want you to understand this, Ryan's 100% of the success in GameStop is because of you. Because you allowed him to raise billions. That's it. He has raised 0 fucking new revenue streams, and you have been burning cash the entire time. The first time he bought, you guys raised capital, you paid off the debt. He just kept burning that money slowly until he did another capital raise, and then he did another capital raise. And everybody, like I said, there's no difference between him and Adam Aaron other than the fact Ryan Cohen started, and he had $1.2 billion, and you guys paid off his entire debt for him, and he was able to raise billions after. Adam Aaron started at $6 billion and was unable to raise that much money, and had to deal with debt and dilute along the way as a tactic of survival. That's what he had to fucking do. Again, it had nothing to do with going with, oh, it's got to get the shorts. No. It was literally what he had to do because he was burning hundreds of millions a quarter and had fucking 3 to 4 quarters in reserves, period. So again, guys, they're all fucking CEOs. They're all going to do what's best for their company, not for a squeeze. That's all I'm saying, guys. Whether you're GameStop, AMC, we're all in this together. No CEO is on your side. They're on the side of what's best for the company and the balance sheet of the company. But I'm going to go upstairs, help my wife, you guys. Thank you all for listening. And again, I can't say that. So, but like I said, guys, thank you all for listening. I'll put those videos out here